Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now today's episode, we're taking a look at another strategy you can use to help hit those credit card welcome offers even that much easier with spend you already have to make. So this episode will be focusing on paying your homeowner's insurance with a credit card. So I'll walk you through everything you need to know, how to do it, why you'd want to do it, and some credit card tips you'd want to consider as we go. So of course, if that sounds interesting to you, then go ahead, press the subscribe button, and let's get to work. Now, overall, I've done a few different videos on this topic. I've done one specific for property tax, second link down below for you. And I've done one overall where I looked at my entire escrow account together, which I'll explain in a second, through owning houses and how it all broke down in the strategy. So those will be down below for you. This is simply a deep dive into the homeowner's insurance part of it. So to get everyone up to speed here, again, chapters, tools if you want to bounce around, but to get us up to speed here so we're all talking the same language, HOI or homeowner's insurance is one of those things that's required for sure when you get a mortgage. Now it's, you should probably keep homeowner's insurance on your house no matter what, even when the mortgage is paid off. We've had a ton of storms come through and trees fall down and things like that. You just want your house to be protected because it's a sizable amount of money to say the least, right? So it's always advisable to have homeowner's insurance, but it's definitely required, for your time while your house is under mortgage. So what's going to happen is, for many of us, how it starts is when you close your loan, the lender will have you set up escrow account. They'll do it for you. Now, there's a mortgage lender, and then sometimes there's another company that's kind of servicing your loan, making sure you're making your payments, that the escrows are met, and things like that. But for our purposes, we'll just say lender to make it simple, right? So what happens is you're going to have that mortgage payment, right? So your mortgage payment will consist of a few different things. It's principal, the amount you borrow. It's interest, right? The money, the financing charge, basically. Then you could have mortgage insurance in there, which we're not going to touch on too much. And then you could have taxes and insurance, right? So the rule is, generally, if you have less than 20% equity in your house, like an 80% loan to value ratio, then the lender is going to require you to have escrow. And the rationale is because it's perceived as less risky if you have 20% in. I don't believe that for a second. I've been on the mortgage desk for well over 10 years, but they're the ones with the money, so they get to set the rules. So as a part of your mortgage payment, they're going to collect your taxes and your insurance. So you can pick your homeowner's insurance provider, and so you'll provide them the documentation, and then basically they'll take your payment, and what's due is paid yearly, so they'll take it, divide it over 12, and each month you'll make a little bit of a payment, so it adds up to the full amount. Then when that payment is due, the mortgage company or the servicer will make that homeowner's insurance payment on your behalf to renew your insurance. Sometimes they forgot mine. It's a whole nother story. We won't get into it, but happy path, that's how it works. So when you get to that 80% or the 80% loan to value, you can phone up your lender and say, hey, look, I would now like to take on the responsibility of my escrow account myself, which means they will close your escrow account, and now you will be responsible for paying your homeowner's insurance. Some lenders will let you close both accounts or leave one open but not the other. So you can say, hey, you do the property tax, I'll do the homeowner's insurance. It really depends. You'd have to ask. For me, I close my escrow account as soon as I can. I personally don't feel the need to put down 20% off the jump. I'd rather have that money freed up to do other things, but you could do it. The value here, we're going to get the credit card part in a second, but the value here again is that you're just paying them money to hold on to and do nothing with. There's a handful of states where they have to pay interest on your escrow account, but it's not common. So, it's more advantageous, in my opinion, to not pay them sooner than you have to and have your money to do stuff with. Of course, this does require a level of budgeting, so because you need to know when your homeowner's insurance is coming due. So you can see where we're going with this. Homeowner's insurance comes due. It's a big expense. It's a required expense. You know what we like to do? We like to pay this with a credit card, right? So the first part is really simple, just removing it out of there. And then after that, it's really just budgeting and picking the right credit card to use. Now, overall, I think paying homeowner's insurance is going to be a lot more simple than paying your property taxes with the credit card. Reason being, property taxes go to your local municipality, which means you usually have some outdated, annoying system to make a payment to. There is almost always a processing fee or convenience fee, as they call it, associated to paying your property taxes. So with homeowners insurance, you're paying to, a company, a for-profit company, and they're usually set up to handle this better. Now, it doesn't mean every single insurance company you use is going to, not charge a convenience fee or not try to force you to use a check or something like that. But the big guys, Progressive, Allstate, State Farm, all those guys, they're set up to take credit cards. I have Progressive, and even I have Progressive for like one house, and I have like Home Site by Progressive for the other one. Both of them take credit card. They don't charge a processing fee. Again, it's priced in there, but you get the point, right? They weren't giving the mortgage company a discount because I didn't pay for the credit card, so same price no matter what. So then the rest becomes picking the card that you want to use. Now, this is a little bit easier because when there's a processing fee involved, you really need to have an intro offer lined up because you need to have something to make it worth taking that 3% processing fee hit. Assuming your homeowner's insurance doesn't charge a processing fee, then you could just simply use a city double cash if you wanted to and get 2% back on that. That would be the table minimum. You wouldn't want to use anything less than a 2% card. You could do that, and that would be fine. That's a ton of points on something you had to buy. Then the next tier would be just, hitting a welcome offer, right? So pick your card, right? Whichever card you want to start, you could do that. That would put you much closer to hitting a welcome offer. Now, what I like to do is try to line up the multipliers the best I can. So this time around, I think one house was like $1,400, $1,412, something like that. I just did this. So I actually got the US Bank Business Leverage card, which at the time of taping when I did it was spend $7,500 to get $750 back in cash. But I picked that one because it's a business card. Two, it's a lofty spend requirement, so knocking out $1,400 in one swipe, pretty good. But number two is that the US Bank Leverage card has a ton of different 2% categories on it, which I think one of them was insurance, so I'll get 2% on that. So on top of hitting the intro bonus, or getting closer to hitting the intro bonus, I'll also net 2% back on that spend as well. Again, the 2% isn't necessarily better than the double cash as we just talked about, but intro bonus plus 2% helps out quite a bit. Plus, US Bank, the two things that they get correct, surprisingly enough, is that they do waive the annual fee on their business cards for the first year, which is nice, at least again at the time of taping. And the other one is they give you 5 months to hit the intro spend. Also nice. So that's how I pick that card. And that's something you could look for too. Like, can I line up an intro bonus plus a better multiplier to kind of stack together, something like that. Now, in addition, I've also seen folks use, go on the Ink Cash route where you go buy Visa reloads from the store, from the office supply store when they waive the fees. You can do something like that and get 5% that way. I've also seen people prioritize cards like Hilton cards. They give you a reward night for if you have so much spend on them. You could do that. Plus, you get the points. Plus, you'd be contributing towards the rewards night. The only thing I'd say, it also works for auto insurance too. But when I go for Progressive, they don't take American Express. So I was doing this the last go around with the American Express card for auto insurance, but sometimes they do allow for PayPal. So take a look at your options first, because I was able to put my American Express card in PayPal and pay that way, and it was fine. But take a look at your options. Make sure your payment, your homeowner's insurance company is taking, all the different payment method. I mean, there's only really 4: Visa, MasterCard, Discover, and American Express. Make sure they're taking whichever one, and usually only American Express is going to be the potential issue, which you don't see too much these days. But I would do that. And then additionally, you are supposed to shop around your homeowner's insurance from time to time, just like changing anything, churning anything to get the better rate. So as you continue to move, just make sure, the same thing we covered, they're going to take your payment methods. In addition to that, there are some insurance cards. State Farm actually has dedicated credit cards through US Bank. They're okay. I think it's like 3% on insurance up to a certain amount, so that could be an option. AAA has cards too, which weirdly enough are much better for non-AAA things, but we don't see too many other insurance-focused cards to my knowledge. So again, I just try to line it up, intro bonus, then best multiplier. But even if it's 1x back and I'm going for an intro offer, I'm still fine with it. But overall, this is a really simple strategy to, in my opinion, take spend you already have to make. And then also, again, as I said, you do need to budget more, but I would much rather have my money up front all year, and then in month 12 make that payment versus just giving the mortgage company money of mine to sit on and for who knows how long. Plus, again, like I said, sometimes they forget to make the payment. That's a whole nother thing. But overall, paying your homeowner's insurance with your credit card is much easier than the property tax, because you ideally have to worry for less or plan for less, being that finance charge And, counties can sometimes be weird with the payments they accept. So anyways, guys, that is a new strategy that I'm using. Again, not groundbreaking, but it is very helpful. So let me know down below what your strategies are, especially your property, real estate moguls out there. How do you make it work? I love to hear your stories. But anyways, guys, that's going to do it for this one. So of course, if you liked it, drop me a thumbs up down below. If you found it particularly interesting, consider subscribing to the channel. So again, we're posting content just like this every single week and right back every Sunday with all the news you can use in the week that was on credit and finance, and every single day over on profitablecontent.com, which is the channel's website where we have the latest news stories, credit card offers, and bank offers. So love to see you guys over there, making sure you're taking full advantage of all the money at your disposal. Anyways, guys, that's going to do it for this one. As always, thank you so much for watching. We'll talk to you very soon in the next one.